Alright, so in this video I thought I'd show you how I'm investing my money in 2021, and the purpose of the video is basically to give you some ideas potentially about how you could be investing your money, and also to give you some insight into just how I'm thinking about investing my money. So let's straight away give a quick overview of my investment strategy for 2021, which is basically this. Index funds, some individual stocks, businesses like this channel, other business ideas and potentially startup investing, and lastly we have real estate and cryptocurrencies. So how do I actually use all of these strategies? And first off, I just want to say that this is of course not financial advice of any kind. This is just how I'm thinking about this at the current moment. Okay, so as of right now, I'm not currently implementing all of these strategies to the point where I would maybe like to in the future. But as of right now, these are the strategies that I am implementing to some degree, and also what I'll be doing or focusing on in the coming year. So first, let me just show you my current breakdown and also my goal breakdown, and then we can look into how I'm thinking about each individual investment strategy. So here's one pie chart showing my current asset allocation by percentage, and on the left we see my future plan or what my goal breakdown would be. Real estate 47.5%, businesses 25%, index funds 20%, stocks 6.5%, and cryptocurrencies 1%. And then the goal is businesses 40%, real estate 35%, index funds 17%, stocks 6%, and cryptocurrencies 2%. Now, the reason that I want businesses to be a bigger part than it is today is that the goal scenario is that I'm investing in startups and my own other businesses, which means that if these investments pan out, then they can have the potential to take up quite a big portion. No matter how that goes, I'm kind of expecting or at least hoping that will be quite a big portion. But now let's get into and break down how I'm thinking about each individual strategy in 2021. So firstly, we have index funds, and this is basically going to be and have been my way of actually storing value for a while now. And notice that I didn't say store of money, and that's for a very specific reason, and that is because of the fact that storing money is essentially useless because of a little thing called inflation. Inflation basically means that if you put your money that you made today away in a vault, then 10 years from now that money won't be worth as much as it was when you put it away. This is why you can ask your grandparents what they bought their house for and what it is worth today, and you'll see that had they not bought the house but instead put the money away in a vault, they would not have been able to afford the same house if they tried to buy it today. And this is inflation, and that is why you don't want to be storing money, because you want to be storing value. And your grandparents' house then is a decent example of a way to store value. They used the value of the money that they had at the time to buy something that maintained or even potentially increased in value over time, while at the same time the amount of money they used to buy the house decreased in value. So that is basically my number one tip, is to avoid and to protect yourself against inflation. And it can seem like it isn't a lot, and it can seem like something that you just like, oh well, yeah, I know about inflation, but I'm not going to care about it for right now. And that's really bad, because yes, over a year you may not notice it, over 2 years you may not notice it, but over 10 years you're definitely going to notice it. Which means that if you only ever save your money into a bank account, you're basically going to be stuck in this fairly destructive race where you're basically just saving more and more money each year, but your money that you've had in your bank account just decreases in value. And let's say that you want to buy a house, that house just keeps increasing in value. Almost to the point or to the same extent that you're making the money, which means that you're never going to have enough money to actually buy the house. So even though you keep saving, you just never have enough money. And for me, the best way to protect against this is to buy index funds. And this also comes with the caveat of time. I'm prepared to keep my money in the index funds for a long time, which means that even if the economy crashes or something like that, I will be prepared to just keep my money in there until the economy rebounds. And this is not entirely without risk, because if we look back at pretty much every historical market crash that has happened, I would say that the people that it happened to would have said that this has never happened before, and it really hadn't in many cases. Yes, there had been crashes before, but not for the same reasons. Meaning that right now, if we were to look at historical data, then a reasonable conclusion would be that the market seems to just always rebound. Anytime there's a massive crash, the market seems to rebound a little bit later and end up higher than it was before the crash. And this is because it's done so every time in the past. But the problem with this is that most of the biggest crashes that have happened throughout history were due or were caused by things that had never happened before. So this means that just because something has been a certain way in the past doesn't mean that it'll be that way in the future. So we may just be fooled by randomness, and the next crash might be something that disrupts the whole system. And I'm no expert at all, so I'm not saying that this will happen or that it even could happen, but I do think that it's worth keeping in mind. And I also do suggest that you just never risk everything, ever. And that you just try to take calculated risk with limited downsides. Right now, that's what I consider index funds to be. Calculated risks with limited downside. Because if I was to lose all of my index fund money, it would have to mean that Apple, Google, Tesla, Microsoft, and all of the S&P 500 companies would have to go completely bankrupt. And if that was to happen, we're basically looking at like an apocalypse type scenario. So in that case, your money probably won't have much value anyway, and food might be the new currency. So for those reasons, I'm currently using index funds as my main way to store value. And the amount in percent of my money that I actually store in index funds varies a lot. The main idea that I have is to use this as a safer savings account. So I'm basically collecting value here that I can then use as funds for my later strategies, such as the next one, which is trading individual stock. Now, I'm not the biggest fan of Warren Buffett.
And to be totally frank, I'm not his biggest fan.
But he did do a pretty interesting thing a couple years back, where he basically issued a challenge to hedge funds, saying that if you beat the market, otherwise known as index, you win. And as you can see from this chart, the index beat the hedge funds by a mile. Meaning that beating the index for mere mortals like myself is basically going to be impossible, but I still like to try. I sometimes do invest in individual stocks, but the idea here is usually that I'm looking at these investments as opportunities to learn about investing. So I do, of course, I'm hoping to beat the market, but the idea mainly is that I want to try to learn in a risk-free way, and I want to try to find out how to think about investing and what to look out for in investing. Later on, I will talk about startup investing and even investing in my own business ideas. That is also a lot riskier because it usually requires a lot more money to be invested. With individual stocks, I can take low risk and still have an opportunity to learn. Another great way to learn about investing in stocks is with Stock Battle, who's sponsoring today's video. Stock Battle is essentially like fantasy football, but with stocks. As soon as I heard of this, I just thought it was such a great idea. Stock Battle uses real-time data from Nasdaq and Yahoo Finance, which means that you are testing your skills in real time. And I think this is just such a great idea because there's so many people playing fantasy sports of different kinds. And to be honest, it has very limited value for your life. Because yes, you learn stats about players and you might become really great at predicting who will win, but you can't really apply this in the real world outside of sports. Compared to doing this with publicly traded companies, with Stock Battle you can basically practice your trading skills and compete with your peers that are on the same or similar skill level as you. Plus, you can win real money if you pick the winning stocks. You will get $3 to start with after you've registered, and you can withdraw whatever money you win super easily. So I highly recommend checking it out. Gamifying learning about the stock market just seems like such a great idea in my opinion. Okay, so my best advice here for investing in individual stocks would be to look out for companies that are going public. And my brokerage firm that I'm using for trading stocks basically sends out emails every now and then with new companies that are going public. And this is usually where I'll be focusing my attention on and also doing my research. This is a great way to learn too, because it's very similar to if a startup came to me and wanted me to invest. Because then I would have to research the company, the market, the products or services, and the market for them, and everything and anything that could be relevant. So this sort of investments, although it's riskier than index funds, is something that I consider sort of like a real world school tuition, if you will. And maybe because of pure random luck, but I've actually made a lot more than I've lost within these sort of investments. But again, I only put money in that I can afford to lose, and I employ a strategy here where I set a price for myself where I will sell no matter what. If it hits that price, I will sell everything except the profits on that investment. So if I put in $100 and my predetermined selling price is $101, and then the stock goes up by 1% to $101, then I'll sell $100 of the stock and leave the $1 profit still in the stock. This way, I don't need to worry about the price of the stock anymore, since right now the only money that's there is the profit that I made, and it's money that I never really had. And if you're looking to get into trading individual stocks, then I would definitely read up a little bit on stop losses, which basically is what I just described, but in the opposite direction. So basically setting a predetermined low price at which you'll sell, but that's automated. So even if you're asleep and the stock drops below a certain price, you will automatically sell it without needing to physically log in and do it. And that's a good way to save you from massive loss. Next, we have the investment strategy that I call business. And here we're currently talking about investing in businesses of different kinds. Right now, my main company that's generating revenue is this YouTube channel, this YouTube business. Today, what I'm doing, or what I'm about to start doing, is investing in index funds just to store that value and protect it against inflation, so that once an opportunity comes along, I have the capital ready to invest. Where the goal is to be able to become a sort of angel investor, meaning that small startups can come to me with ideas and I can invest in these ideas that I believe in. And this would be a very fortunate position to be in, where I would essentially take on a dormant investor role in that company. And maybe in some cases, I would work as an advisor to that company as well. This is, however, quite far away. Businesses that I'm planning on investing in are also going to be my own ideas. And here I actually have something cooking right now that will hopefully be ready to launch fairly soon. And that's essentially the main way that I'll be utilizing this strategy as of right now. Basically just investing in my own ideas and my own companies that I come up with. Next, we have real estate, and this is one that I currently have limited experience in. I want to get into investing in rental properties of different kinds, as this can sort of be a way to generate some passive income along with potential increased value of the properties that I own. However, this one is a bit hard to know which way to go because there are issues with renting as well. Especially here in Sweden, where you basically cannot even kick out a tenant even if they don't pay or like behave really badly. It's super difficult to do that, and I'm not sure exactly how it works because I still need to read up a lot more on this. But I do think that like owning an apartment house or something like that would be a really good opportunity, but that also requires a lot more of a starting capital to start doing that. But my first move here will be to buy an office space of some kind. Right now I'm renting the office that I'm currently in, and since moving here I've realized some of the problems with renting a space like this. The main one being that any changes that I make that increase the value can basically work out unfavorably for me. If I renovate the space and spend thousands of dollars doing that, then I'm basically paying to increase the value of someone else's property. And on top of this, the owner or the landlord can actually decide to increase the rent for the space because of the increased value of the property, which he probably wouldn't do that, but this is something that he could potentially do. And this is why I'm currently on the lookout for a property of some kind that I could actually buy. And that will probably be the first type of investment of this kind that I'll be doing with my company. And lastly, we have crypto, which is something that basically right now represents a very small portion of my investment strategy, but I do want to increase this a little bit more, basically double it from 1 to 2%. And that is because I do believe in the idea behind cryptocurrencies. To me, it just seems to make sense. But as you can see, I'm not that bullish on it since I only have 1% invested in it. And that's because right now I do think that it's quite risky. It's super volatile at the moment, or in other words, it moves up and down in price a lot. Which means that right now as a store of value, it's not very good because you don't really want to buy anything in Ethereum, because if you buy something right now for a certain amount, then tomorrow the Ethereum basically increases by 10%. Then you've essentially spent a lot more money on that thing than you wanted to spend on it. And same thing goes in the opposite direction. So you don't really want to sell anything in Ethereum, because if you sell something today and it decreases in value tomorrow, then basically someone got something super cheap from you. So therefore, it's not a very good store of value right now. But compared to 2015, it's a lot more stable. And compared to 2011, it's like crazy stable right now. And this essentially tells us that over time, this gets less and less volatile, or it has been doing that in the past at least. And so someday I do believe that it will be a decent store of value. And I also think that right now it's like fairly far away from mass adoption, which means that it still has a lot of potential to grow in value as well, which makes it at least like a half decent investment opportunity as well. Okay, so that is my investment strategies as it's looking in 2021. And I think that this might be an interesting video to keep making like every year, so 2022, 2023, and just see like how my thinking about all this and how my investment strategies might change over time, because I'm under no illusion or no misconception thinking that I have got this all figured out right now and that I know everything that there is to know. I think this will change. As I mature, my trading strategies will mature with me. Any How I Met Your Mother fans out there probably get that reference. Anyway, that's it for this one. And in case you've missed it, I actually post mini courses over on Patreon right now, so you can check that out. There'll be a link in the description. And yeah, that's it for this one. I hope you enjoyed it, and I hope I'll see you in the next one.